Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine.
Hello everyone, I'm Bryce Duskett, and thanks for joining us today on Market Journal. We're already halfway through the first month of the new year, and we have a busy show in store for you this week. As we kick things off today, wheat can be a profitable commodity for some Nebraska producers. Beyond the potential profit, growing winter wheat can also help promote the control of tough weeds and improve overall soil health as an added bonus. In fact, there are several upsides to what wheat can do for your operation. Market Journal's Mike Straub recently caught up with the extension educator Nathan Mueller to discuss some of those benefits of the Winter Wheat Works initiative.
But the point is if you wait until
the Winter Wheat Works initiative is a program focused on helping growers add winter wheat to their cropping systems and has many resources available.
Yeah, the Winter Wheat Works initiative is an effort really that I started as a local extension program and then kind of grown it to across eastern Nebraska and into south central Nebraska, just helping growers add winter wheat into their cropping system, which is something that we've lost over time, and there's some real big advantages to adding wheat here in eastern and south central Nebraska. And so it's just offering a suite of extension programs, outreach, social media, where they can connect and get information that's unique to our area in terms of growing winter wheat.
Soil health is just one advantage to adding winter wheat into crop rotations.
There's a lot of opportunities for wheat in the rotation. I think one of the big ones, guys are really interested in men and women in production ag are really interested in soil health and even carbon now. And there's advantages from increasing soil infiltration rates, carbon and nitrogen in the soil, adding wheat into that corn soybean rotation.
Adding winter wheat to your crop rotations could also be a great tool to help with weed issues.
It can be weeds, disease, and insects, and probably the biggest one on the, just helping out with that is on weed management. Palmer, water hemp, mare's tail are all problematic weeds in eastern Nebraska. And so it gives you a different tool in your toolbox for integrated weed management to have wheat into the rotation, changes up herbicide options, and adds pressure just because wheat's a cool season, winter annual, where the other two are a warm season grass and a warm season broadleaf. So it really helps with diversifying that rotation. And there's data now that shows both in terms of minimizing risk from extreme weather events, but that diverse crop rotation really does help stabilize yield in those other crops. And so there are yield benefits to adding wheat.
Improving infiltration rates and stabilizing yields are just some of the benefit factors growers may not always consider when growing winter wheat.
What we don't factor in is that if you're getting 3 extra bushels on wheat, maybe 5 on corn, you're improving infiltration rates, you're maybe stabilizing yields, improving soil health. There's a lot of additional advantages to having wheat and moving that money around. The wheat may not make you that much in the year of, but adding dollar amounts back that you made on the corn and soybean is really money you need to move back to your wheat balance sheet. And so there's a lot of reasons growers are looking at wheat, and so I've worked with growers that have been growing wheat, and that's kind of where this started, was a guy that just had a question and kind of started the program from there because there was a need there. And now there's quite a few growers that are growing wheat for the first time, or maybe their father or mother grew winter wheat, but they haven't. And so it's really been fun to see wheat acres expand. And I think at least locally where I'm at, wheat acres were up slightly last year and then probably more so this year for the first time in quite a few years.
Implementing winter wheat into your crop rotations can have big advantages for growers with livestock.
So the normal rotation, or where I like to start people off just to minimize some management issues, is plant corn, then plant soybeans, and as soon as those soybeans are harvested, hopefully you can get them out into September, early October, plant that winter wheat. And then that wheat will come out into June, early July. And then you also have an opportunity to add really a fourth crop in 3 years, and that could be a forage crop. It could be a double crop sorghum, double crop soybean, sunflower, or what we're talking about at some other programs is just annual forages if you have cattle in the rotation. That's where winter wheat, I think, it really plays into some farm operations with people with livestock to have that double crop forage crop after wheat's a huge advantage with, our 29, 30 inches of moisture in eastern Nebraska. So if anything, we can almost squeeze in 4 crops in 3 years versus normally you just get 3 and 3 if you just were going corn, soybean, corn.
Because of the root structure wheat has, soil health and structure will improve over time.
Know that wheat, because it's a very dense fibrous root system near the surface, really does help improve soil structure over time. That aggregate stability helps minimize compaction. It brings additional soil health benefits, and we know there's connections with the microbial health with the soil structure benefits of having water stable aggregates. So it really helps across the board, and that's one of the advantages to adding wheat into the rotation, is just having a different root structure in that system that really, if you think about our prairie soils, they were perennial grasses, and so at least having an annual grass in the system really provides an opportunity to move things back maybe a different direction on our soil structure.
Wheat lives phosphorus.
If growers want to start off slow or don't have the equipment needed to implement wheat into their rotation, getting in touch with people you know can be a great start.
Yeah, I think it's not an all or nothing. You don't need to be all in on this day of trying wheat, and I've worked with quite a few guys. If you don't have a drill, find somebody that can custom drill for you one wheat field to start off with. If you don't know how to make the combine settings, maybe you find somebody in the area that already has wheat that would be able to custom harvest that. That's what I've done on my field. I just have one small field, and so it doesn't make a lot of sense to invest in equipment. So there's opportunities to get your feet wet with having opportunities to have somebody custom do that for you. And then that's part of the goal of the Winter Wheat Works initiative, is what are the main management things I need to consider so I have a success? How do I get 100 bushel wheat in eastern Nebraska? We know we can do it, but just like any crop, not putting in inputs, not managing it right, it's hard to get there. And so that's part of my initiative, is to provide that type of extension program and information. Farmer panels, there's a listserv that you can be on that really help you through some of those steps and things to consider.
Steve, this is at 56.
If adding winter wheat into your crop rotations is something you've considered, the Winter Wheat Works Initiative would be the perfect resource to utilize. Reporting for Market Journal, I'm Mike Straub.
Thanks, Mike. If you'd like more information on the Winter Wheat Works Initiative, you can visit the croptechcafe.org/winter wheat. We've also taken the liberty of posting that link to the Market Journal website. Earlier this week, one of the major meat processors announced the company had been forced to lower their slaughter capacity due to a surge of new COVID-19 cases. USDA data confirmed that slowdown, with the January 7th data showing a dip of 6% as it compares to last year. To discuss what this could mean for the livestock market, we were joined by Doug Simon of Tredas.
Well, the hope is that this, just reading the papers, and they were saying that the Omicron is supposed to maybe peak out nationally. It happened that way in England, so hopefully we'll be in that type of case. But obviously there's just a lot of disruptions when people are getting sick and have to stay home, and understandably so. But it's, in the meatpacking industry, it's one thing, like we each run our individual ranches or farms or companies, and as you feed into that, that's kind of it's a bottleneck in supply, in the sense that you've got a lot of animals that are coming in there, you've got a lot of people, you've got a lot of things that are happening, and it's all got to be just in time. And that's the way we're set up, and that's why there's big slaughter kind of processing margins right now. I think they're $100 above what they were last year at this time, but there's a lot of uncertainty there, and so I think they're trying to do the best they can in a very difficult situation. But it should be getting better, I think, down the road here from what the CDC is saying.
Particularly with cattle, what have you seen in terms of price direction lately?
Well, it's an interesting, question. I've been talking a lot about inflation when I've gone out and talked to some different banks, different groups, and we've been in a year on the, cropping side where we've had cost push inflation, where we've had higher input costs, and that's driving corn prices higher. And it's also trickling over, or not just trickling, it's just flooding the corn market as well, where it's pushing higher corn prices. And also because of the dry conditions that we've got out west, we've got higher forage, input. So basically, when you look at those cost of gains, we've gone from, if you look at prior to this last year, we've been running 80 to 90 cent cost of gains, and now we're running more $1 to $1.15. So our cost of gains have gone up pretty dramatically. But still, when you look at fat cattle prices, we've ended at $1.40 here last week. We were up in the 146 range, probably 3 weeks prior to that. So when you look at those prices, we've had pretty good runs, and there's some margins to be made. There's some profitability in there.
Well, you mentioned the feed side of this with the ongoing drought in the West. You have to imagine some folks are continuing to reduce their cattle herd, but the price of corn continues to go up, and cattle guys and the hog guys don't like that as much as the grain farmer does. Right. How much higher do you think grain can go before people start having those serious conversations about maybe switching to some alternative feed?
That's a good question. And last year we had situation in the summer where corn basis and corn prices got very high and wheat prices were very low, and there was a lot of wheat substituted into the rations. And this year we've got wheat basically $1 higher. Basis is anywhere from 80 to 90 cents over on wheat too. So it doesn't look like we're going to be putting wheat into those rations, and so it's going to be a year where it's going to be harder to substitute in wheat. That also last year had a big impact on corn basis when they fed that wheat, kind of beat the corn basis down.
Well, Doug, you and I are having this conversation mid-January right now, even though the weather doesn't really seem like it is outside. What do you see, though, in terms of the cattle market with seasonal trends?
We've had a pullback here from, I was saying, that 146 level to 140. We might have another run, maybe back up to those old highs, but once some of that time eclipses, we tend to be putting in seasonal highs on that. And so, from a hedging standpoint, I think people have to be looking at that. I've fed cattle in the past, in recent past, and kind of more of an opportunistic type, whenever there's margins to be made. So would I be hedging them here at this level? I mean, we're sitting in that 140 level. You probably buy puts here, maybe sell some calls up above it and because we're on an oversold location. But I think if, we have any rallies back, you'd probably just flat out get them hedged, and because those seasonal tendencies tend to be, kind of they're pretty intense. I mean, I don't know if we can overcome those, but longer term, you kind of hope the cattle will be higher longer, when you look at those big, as we slow down probably production and have less meat going through the system, those prices will probably be higher longer term. But I think temporarily here, I think you want to definitely maybe look at some of those puts. You can also look at livestock revenue protection insurance. We do some of that as well. So we could talk to people about that if they have some interest in that.
Just some final thoughts from you on that risk management tool. That's a tool people can have in their toolbox when it comes to protect themselves, right?
They can, yeah. You can use just straight, we tend to like using futures rather than just doing like cash, because usually there's basis opportunities. And we always look at, and the same thing on grain futures and the basis and what carries are out there. So right now, actually, we've had we don't have as much premium in the nearby as what you would think versus those deferred. So that's not a real bullish thing in my mind. I would think we'd have more premium nearby if we really were in a really hugely bullish market. And the basis levels are maybe running, $1 to $2 under. That's about what the average basis was last year at this time. I guess we'd like to see basis be a little stronger if we were really in a wildly bullish market. But again, you can use some puts, if you think there's more upside, but you still want to protect yourself, and you can use that LRP, product to put a floor underneath but I think we're always interested in trying to protect margin rather than trying to speculate in the price. So they're probably saying, well, these guys are, why are they always using options, or why are they hedging? Because we like to protect that. And that's our goal, is to manage a margin and be in business for the long run rather than getting pushed out of the business. So.
A big thanks to Doug for his time this week. Moving on now to the grain market. On Wednesday, the U.S. Department of Agriculture released the latest World Agricultural Supply and Demand Estimates, or the WASDE Report. That report was accompanied by a report of December 1st grain stocks and NASA's report of winter wheat seedings. To break down the report numbers and the market's reaction, we were joined by Jeff Peterson, who's the president of Heartland Farm Partners.
There's a few things that really stood out to us. If we were to just look at it big picture, Bryce, what we'd say is that the numbers actually probably from the U.S. side were probably a little bit negative, but not so negative to put a lot of pressure on the market. But as we looked out to the world numbers, I would say, and we'll dig deeper into this, overall the world numbers were actually a little bit supportive overall. And so now what we do is we get past the report, and now we're back to trading a weather market again. We'll trade in the South American weather.
Well, let's dive into some of those numbers specifically. Surprises for corn.
Yeah, as we dig into the corn number, a couple things that do stand out. I mean, we came in with a bigger ending stock number. Not a lot. 1.54 billion is what we came at. Trade was expecting 1.485 billion. We ended up seeing on the corn side, overall yield was unchanged. We did see an adjustment on the harvested acres. They brought those up. But a couple things that stand out that I think are going to have to be adjusted down the road fall into the demand side. We ended up seeing an increase in demand on the ethanol. They brought that up 75 million. But the thing that really surprised us is that they brought the corn exports down 75 million bushels. All of our calculations so far would suggest not only are we ahead of pace to hit what would have been the number in December, but we probably, we're for sure going to hit the number they had. So I think down the road we'll end up having to see a couple things happen. We'll have to see ethanol come up more, and I think we'll also have to see that export number reversed and actually taken higher, which down the road means we should see some lower ending stocks yet.
So that's the corn side of things. What about for soybeans, Jeff?
On soybeans, there really wasn't much for adjustments. They ended up tweaking and brought the ending stocks up to 350 from 340. The trade was looking for a 349, so not much of a change there. We did see an increase in the yield, a couple tenths, but really not much. So really, honestly, on the U.S. soybean side, really not anything for surprises there.
So that was obviously one of the big drivers of the week here so far as we have this conversation. How did the markets react to all this information?
Initially it was really interesting when we came out. At one point, take soybeans for instance, at one point soybeans were down 20, and then they ended up being at one point up 10. So overall, I would say they digested everything there, and now we're back to trading weather. And on the corn side, we saw that two-sided trade back and forth also on the corn side. Saw a little more weakness coming from the wheat side, but overall now we're focused on the weather and what's going on there again.
February 9th, that's the next WASDE report. We're obviously looking at the weather situation, but factoring that as we get ready for the next one. Anything in particular you're going to be keeping a close eye on as we do? I know we're talking about the current one now, but as we get closer to the next one?
Yeah, a lot of things we got our eye on. I mean, now that we've got the U.S. production behind us, we're kind of honing in on where the demand numbers are running. We now have to keep a very close eye on how does this crop end up finishing, in South America. And we're going to be in particular watching Rio Grande do Sul, Paraná, southern parts of Mato Grosso, also Paraguay, Uruguay, even though they're not big producers, but the big focus has to be on Argentina. And as we take a look at Argentina, one of the things that's a little concerning for us here is the fact that they've had probably 10, even maybe 12 days of degrees that have been over 100 degrees on the temperature side. They've been dry. We've got some moisture coming into us that can help, but we're watching very closely. What does that forecast look like about 15 days out? Because as we go down the road, a few things that we think we're going to end up seeing, Bryce, is that even though there were some adjustments on, and more with it than the trade expected on corn and soybeans for South America, we are expecting some bigger adjustments down the road. Part of our reason behind that is that we dig into those crop condition scores this last week. I haven't seen the update this week for the Buenos Aires Grain Exchange, but they were sitting there at a 40% good to excellent on corn. A month ago, that was over 90%. And with the temperatures we've had this week, we think that very well could be down to 25%. So that's kind of some of the areas that we're watching going forward.
And remind us, I know it's a big geographic area we talk about when we mention South America, but where are they at in the growing season and even harvest season now?
Yeah, no, that's a great question. So up in Mato Grosso, very northern part of Brazil, harvest is getting and going, just moving along ever so slowly. We're going to have to continue to watch along up there because we'll see how the wet conditions are hampering that harvest. You've still got other areas though that haven't all the way got through pod fill yet, and you've also got other areas that haven't got all the way in through silking yet as we move our way all the way down into Argentina. So you've got a full range there yet.
Back here in the U.S., where are we heading with these markets, Jeff? Have you got your crystal ball with you today?
Yeah, I think what we're going to end up seeing is that as we dig in and take a look at the weather, we do have some weather systems coming through for Argentina here. Going to pick up some drier or wetter conditions actually coming in probably Sunday, Monday, Tuesday time frame, but they've got some additional high temperatures over 100 to 105 leading up to that. The whole key to it as we come into Saturday night trade and Sunday night trade, actually in the Sunday night trade, is going to be what do we ultimately end up seeing for the weather forecast, how much rain actually ended up falling. I think we've still got some little bit higher prices to go forward here yet, but I think this is the type of area where you have to get ready to start making some sales on the old crop and the new crop side, because we know these weather markets will turn fast.
Thanks to both our analysts for taking the time to talk with us. Now, next week, we'll be joined by Mike Briggs of Briggs Feed Yard, as well as Todd Holtman from DTN. If you have a question you'd like for me to ask either of those gentlemen, you can email us, or of course, you can get in touch with us on social media, and I'll be sure to pass your questions along. Moving on now, drought was the name of the game, unfortunately, for some of our viewers over the past year. But farming with limited moisture and water limitations on the irrigation side is nothing new to Hemingford farmer Tim Kumpf and his family. In spite of the hot, dry summer, irrigated crops like sugar beets and wheat did very well on their farm. In fact, Kumpf raised the state yield-winning winter wheat in the irrigated division of the National Wheat Foundation's yield contest. He garnered 145.40 bushels to the acre. You can learn more about his winning wheat strategies in the January issue of the Nebraska Farmer. It is now time for weather with Nebraska Extension Ag climatologist and Market Journal Chief Meteorologist Al Dutcher. Well, Al, the start of the week was beautiful, at least here in eastern Nebraska. What are you seeing in the weather outlook?
Well, Bryce, we've had some very nice weather during the middle of the week. Can't complain about that, with temperatures moving up into the 50s into the low 60s. Unfortunately, with the storm system that came through eastern Nebraska during the last 24 hours, and it continues on as it moves toward the south and east, we're seeing some very cold temperatures coming into the region. So we'll take a look at the models here in a second, but I just want to let everybody know the reason that I'm doing this right here from the phone is simply because I had a positive COVID test. Thankfully, at this point in time, I have had no ill effects, and hopefully we'll be back to our normal schedule next week. So let's go to the upper air models and see what we might have in the store as we move through this next 7-day period.
As we can see from today's upper air chart, there's an upper air low that has dived all the way down into deep southern Plains region. This is a storm that brought all the snow to eastern Nebraska and Iowa. By the time we get into this morning, we'll see that snow wrapping around and ending in eastern Nebraska and then moving and shifting toward the Ohio River Valley. By the time we get into tomorrow, that upper air low will be centered over the lower Ohio River Valley with the low pressure system along the surface, bringing heavy snow to the mid-Atlantic and eastern seaboard, particularly as we go into Monday morning. In the backside, some few scattered snow flurries across the upper plains region, and then we start to see the ridge building from the west back into our region, and that should help to start warm temperatures up. It's going to be a very cold weekend for most of eastern Nebraska. By the time we get into Monday, a massive snowstorm over the northeast, and we see a weakening of the flow from our north, and we see more of a north-northwest flow as low pressure develops over eastern South Dakota and the Texas Panhandle. That will bring in that warmer air to our west. Unfortunately, there'll be a quick-lived warmth as we start to see cold air build in on Wednesday, pulling that in into our region, glancing below more toward eastern Nebraska, less of an impact on western Nebraska. As that high pressure moves over a region, we may see a few scattered flurries along the Great Lakes and maybe some upslope flow in Montana. And then by Thursday, that trough starts to lift toward the northeast and high pressure builds back into the plains region. And we should start to see a warming trend as low pressure starts to develop in northeastern Colorado. That will help lift warm air up from the southern plains into our region. And much warmer temperatures as we get into Friday, probably returning back up into above normal category. The thing I would pay attention to is the models are indicating a much colder period developing with another Arctic surge as we get into the later part of next weekend. So the 8 to 14-day forecast from next Thursday to the following Tuesday looks to show that cold air entrenched well over the Great Lakes region. And if we look at the precipitation tendencies with those troughs coming into the Great Lakes, we may see some upslope flow against the Rockies, particularly giving us a chance for above normal moisture in eastern Montana, all the way down through the northwestern one half of Nebraska. So overall, it looks like a fairly warm trend ahead of us, and hopefully we will see much better conditions.
Thanks, Al. Finally, today in mid-November of 2021, we stopped out at the Eastern Nebraska Research and Extension Center to sit in on Nebraska Extension Cover Crop Grazing Conference. We were fortunate enough to catch up with UNL Beef Systems Specialist Mary Drewnowski to discuss some of the day's talking points. When it comes to grazing cover crops, Mary tells us one of the most important aspects is making sure you're planting the right selection at the right time. If you're planting in late summer or early fall, your crop selection will be crucial for a beneficial outcome.
So if we're looking at kind of the two traditional gaps that I see that most cover crops are planted would either be late summer, so anywhere from about July 15th till September 1st, and I call that kind of that late summer time frame. That'd be like after wheat or even like early harvested corn silage. And in that time frame, we can either go with a warm season species like sorghum Sudan, Sudan grass, pearl millet if you're planting really before August 1st, or if you're kind of after that like August 1st time period, then we just suggest switching to something like oats and brassica. So this is a radish that was kind of planted in early time frame, so maybe this was planted in July, and you can see we can get a lot of biomass very, very quickly. My favorites for that time period is really oats and rapeseed. I really like that combination because it can lower your seed cost. I can plant about 3 pounds of rapeseed with 50 pounds of oats, get really good forage production, 1 ton to 1.5 tons, and have some really high quality feed.
Mary went on to say that in her interactions with producers, many will automatically assume that cereal rye is a poor choice for forage. On the contrary, this particular vegetative variant can prove to be quite effective in terms of gains for your cattle.
What we see is that if we manage grazing and we kind of keep it, below 8 inches, we can get really great gains even on calves in the spring on cereal rye. It's also very, very high quality. It'll be about 20% crude protein, about 70 TDN. And so those calves will gain sometimes around 3 pounds a day, which I thought the first time that somebody told me that, I was like, nah, they got a fill problem. Those calves just got really full, and so that was a lot of that weight gain. But we've done 3 years of trials, and we see consistently 3+ pound gain on those calves if we just manage our grazing. So the key there is just not letting it get ahead of you. So I like to tell people to do a couple things, one of which is I like to do some rotational grazing, so I like to move them around so that I can graze it down kind of hard, get it down to 3 inches or so and move to the next paddock, and then I can just manage my moves to keep up with the forage as much as possible. And if it does get away, then pull one of those paddocks out of the rotation so that you can keep up with the other two and allow that one either to be harvested for hay or silage, or just kill it and plant your next cash crop.
Mary also tells us one of the key things about all annuals is that managing the stage of growth really dictates how high the quality will be. However, these decisions will depend greatly on the nutritional needs of your cattle. If you'd like to learn more about grazing cover crops, you can always find the latest information online at beef.unl.edu. Well, that's going to wrap up this week's edition of Market Journal. If you missed a story, be sure to download the Market Journal mobile app, or you can always follow us on social media to join in the conversation. We'll see you back here next week. Until then, I'm Bryce Duskett. Thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska Lincoln's Institute of Agriculture and Natural Resources.